The rally in gold to me is done for now. It's had that measured move. I believe this scenario right here is actually very similar to the scenario that we saw back in 2007, 2008. We've seen this move into, people got out of boring gold and they move into small cap stocks. The Russell 2000, that day he got in, you and I were talking, the Russell was up 6% that day. I think Bitcoin was moving up. So money was coming out of boring gold, which has already hit its target. That easy money is over. Now they're moving into fresh new assets that are primed and ready and will benefit from. It really is just a sloshing effect. I think.
Is the golden rally over? Are we on the brink of another financial crisis? In today's episode, Chris Vermeulen delivers a bold and controversial take on the precious metals market. Why gold's rise to $2,800 may be the end of the line for now. A potential 15 to 25% crash in gold prices. What could trigger it? The shift of money from boring gold to small cap stocks and Bitcoin, and what it means for you. Chris doesn't just stop at predictions. He connects the dots between past market cycles and today's trends, offering insights that every gold, silver, and Bitcoin investor needs to hear. Get ready for a conversation that could change your investment strategy. Let's dive in.
Yeah, I think it will. I think Bitcoin actually might hold up. It'll be interesting. Bitcoin is a wild card, but we've definitely seen, as soon as Trump won, we saw money come out of gold and it went into Bitcoin because he's talking about a reserve. It also went into small cap stocks right away because they're not directly connected with the semiconductor and all the big tariffs as much. And Trump wants to knock the US dollar down because it's so high. It's also hurting the multinationals, the big tech companies. I mean, when you look at all these different currencies, take a look at this, David. When you look at these currencies, the US dollar has been on a tear. Every other currency is just flat out moving lower and lower. So these multinational companies charging services, it's really expensive for all of us other countries in Canada because the dollar is really strong. So this is a big headwind. And so it'll be interesting to see how Bitcoin reacts. I don't know. Right now, it's in a super strong uptrend. I expect it just to go higher. But I would expect when we go into a recession, the stock market starts to sell off and we're in a massive bear market. I got a feeling Bitcoin will move with it. Generally, money is either moving into investments as the whole world goes, like an upward cycle, a rising tide, or people are trimming back on their investments and selling and everything goes down. So I would think it's going to move with the overall economy and move down with the stock market, but it might continue to hold value a little longer, kind of like what gold does, where Bitcoin and gold could end up holding their value while the stock market falls 10 or 15%. And then Bitcoin and gold will catch up and start to fall with the market. I think they could act as a defensive safe haven play short term. I think it's a little lower. And I think the reason why that's lower is because we had this, I'm taking a more conservative kind of upside target. I think the upside target is 109,000. That's where the chart to me is pointing to. So I think that's kind of where we're going. When we look at this long-term chart, I don't really use trend lines. Like we could draw different trend lines on here. If you connect these two highs through here, which I can just shorten that up. We are kind of technically flirting with that trend line, depending on how you draw the chart, but I don't use trend lines because they're generally always breached and you don't know if it's a breakout or a fake out. I really like to follow overall chart patterns versus a trend line that can be pierced. Overall, I think we've got room to run up to this 110, 109. 110 is the next kind of whole number. So that, and that's our target set just below that at 109, so we can hit it. Sometimes things will fall short of a target. Overall, I mean, I think you just need to expect Bitcoin to continue to push higher. Once it hits 110, you've got to expect some more selling. There might be some short-term profit taking, but I do think it's going to be much more severe because it's based off of, not sure how to draw on here, but it's based off of this bull flag pattern. Mm-hmm. It's using the Fibonacci levels. So once you hit 110, we're taking a 2-year chart pattern. It's huge. We're probably going to see a pretty big pullback. I wouldn't be surprised if it pulled back somewhere to like 90 or 80,000 in there and consolidate. As you mentioned earlier, David, once we've hit these other peaks, we've seen very strong pullbacks after that. Yeah. So it'll be interesting to see where, I mean, once we hit that level, I'm cashing out. It's that simple. This is I like to follow utilities very closely, actually. I believe we're in this kind of when utilities outperform as much as they do, they'll have waves where they outperform dramatically, like the SP 500. Usually, it's actually a very bearish sign, and the stock market has a pullback. Then utilities will pull back with the stock market. But we've been in a very similar, like a tear. We had this massive move to the upside. We have another massive move to the upside. And I would say we're starting to get pretty volatile. We had a sharp pullback. We have a very sharp rebound. Over here, it wasn't so much a sharp pullback, but we have a sharp rally. It's not about if it goes up or down. It's just, is there a sharp move, like a parabolic pop? And that's what we're getting again right now. And when utilities are performing really well, and we see gold, which has been on a tear, performing really well, these are all early warning indicators that people are nervous. They want to move to slower assets, dividend paying assets, or physical gold to get outside the financial system, because people are worried about banks and all that stuff imploding. So you're right. I think utilities are something to watch. I watch them all the time. It's actually a very good short-term indicator for short-term market tops. But when you zoom out on this big picture, David, it is much clearer that we're building towards, I think, a major market top. And last time it got to almost the extreme we're at right now, we saw the COVID crash, which you could say is a bit of an anomaly, but the markets have this way of knowing what's going on, and we're starting to see the same thing right now in terms of utilities performing very well. Yeah, so the dollar index here, I like the dollar. My investment account is in US dollars. I think if we go back to the long-term picture of the dollar, I still think the US dollar is the global reserve currency. When all hell breaks loose, money tends to move into the dollar. So I like the dollar index. It has a series of higher lows, a series of higher highs, a bunch of pauses and rallies. And yes, it has a little bit of it's had a rally since Trump got in. Now it's pulling back a little bit. But I do believe when chaos hits, I think we're going to eventually see the dollar push up to $1.20. The DX futures chart here, I think we'll see it go up to maybe even 130. We're going to go way back. I believe we're kind of in a similar 2000 tech bubble phase in terms of commodities being the most undervalued in like 100 years, or actually ever, compared to other assets, very similar to what we saw back here in the tech bubble. So I do think we're going to see money rally into the dollar as a defensive play, which we're already seeing. We saw the same in 2008. And when we have a big rally in the dollar, it's going to put pressure on commodities. It's also going to put pressure on multinational companies. It's going to probably do a lot of damage, other than those holding US dollars. Yeah, so short-term wise, I'm neutral to kind of bearish on gold. It is kind of stuck in a short-term downtrend. It hit the measured move you and I have been talking about for a long time, which is this $2,700 to $2,800 level for gold, which once it hits that level is a measured move. Just like we talked in Bitcoin, going to that 110 level, gold has got the same type of scenario when we look at the overall last super cycle to the upside, the last bull market from the lows to the highs in 2011 and back down. This is the level that gold should be hitting based on its measured move. And now we're starting to see it reverse. So when you step back and look at gold from the big picture, the rally in gold to me is done for now. It's had that measured move. I believe this scenario right here, whoops, let me just grab a pencil. I believe this scenario right here is actually very similar to the scenario that we saw back in 2007, 2008. I think we're going to go into a financial crisis. Gold is going to get hit. We'll see gold down 15, 20, 25% and sell off. So it is still in a strong uptrend. Don't get me wrong, but I believe the measured move is here. I don't think there's a lot of upside. When we look at the daily chart, as you were just saying, David, we have seen a bout of selling hit. As soon as Trump got in, we saw a bunch of selling, lots of volume. And I think we've seen this move into people get out of boring gold and they move into small cap stocks. The Russell 2000 that day he got in, you and I were talking, the Russell was up 6% that day. I think Bitcoin was moving up. So money was coming out of boring gold, which has already hit its target. That easy money is over. Now they're moving into fresh new assets that are primed and ready and will benefit from a Bitcoin trust or a fund and tax breaks on small cap companies. So it really is just a sloshing effect. I think like I hold physical gold. I'm not looking to sell any. I'm waiting for this market to correct so I can add more for the next major leg higher. But right now I'm neutral. We've closed our gold position. We had GLD. We're out of it. We hit our target and we're done. So right now we just let the charts build out another pattern until there's another profitable looking trade set up with high probability.
What a session with Chris Vermeulen. Gold, Bitcoin, market cycles, and the looming financial crisis. Chris has given us plenty to think about. If you found this video insightful, don't forget to like this video to support the channel, subscribe for more expert analyses on gold, silver, and Bitcoin, and hit the bell icon to stay updated, because in these volatile times, knowledge is power. Have your own take on Chris's predictions? Drop a comment below. We'd love to hear your thoughts. Until next time, stay informed, stay prepared, and keep investing wisely.